Welcome back to Morning Markets on Friday the 27th of January. On today's podcast, we've got special guests joining the podcast panel. We've got former England Rugby International Tom May and also leading performance coach Simon Hartley, who reflect on their career but also provide some tips for achieving goals drawn on concepts which they've developed over the years as high performance athletes. Certainly not one to be missed. In terms of economic data prints, we had several yesterday. Today I'm going to focus on the US. The data reported reflected an economy demonstrating resilience despite a number of headwinds against it. This was reflected in economic growth, order books for manufacturers, but also the strength of labour markets as well. So in today's session, I'm just going to break down each of these different aspects to get a better handle on what we're seeing under the bonnet. In terms of economic growth, in 2022, the US economy grew by 2.1%, and this was supported by the strength of consumers spending on goods and services, also exports, and corporations investing in expanding their manufacturing lines, helping to offset the tapering effects as governments withdrew their support, which they injected through the course of 2020 in response to the pandemic. If we home in on the final quarter of the year, the economy grew in the US by 2.9% in Q4, which was 0.4% ahead of what the market was actually expecting. And if we home in on the inputs, the economic growth print demonstrated that consumers are still out there spending. Consumer spending increased by 2.1% over the quarter, which is positive, but it was slightly slower than what we've seen in previous quarters. And business investment was also starting to slow down, but still expanding, but just at a slower pace. Gross domestic product, so GDP, was boosted therefore by companies holding higher levels of stock, so higher levels of finished goods within their storerooms. Durable goods are goods which are expected to last for more than 3 years. So if we look at durable goods order books for manufacturers, then we were expecting to see an increase. So we were expecting to see order book values expand by around 2.5%. But the data reported yesterday actually showed a surge in order books. The value of order books increased by 5.6% in the month of December. This is a very positive reading, but for clarity, that surge was almost entirely the result of an increase in orders for civilian aircrafts. Yesterday, Paul provided insight into the earnings report of Boeing, airline manufacturer. In December, Boeing received orders for 250 aircrafts alone, and that's up from 21 aircrafts in November, with delivery expected by the end of 2024. Almost half of these orders of aircrafts will actually go to China, which is potentially given a signal of the optimism of increased travel as China ease back their very restrictive COVID policies which have been in place for much of the last 3 years. And finally, in terms of labour markets, at a point where even the Federal Reserve, so the US Central Bank, are highlighting that the current levels of unemployment, which are 3.5% in the US, may be too low to provide a sufficient release valve on wage growth and the upward inflationary pressure which wage growth is providing. And therefore it wouldn't be unusual to start seeing incremental signs of the labour market starting to slow down. If we look at the data which was published yesterday in terms of the jobs market, it demonstrated that the number of US citizens filing for unemployment support for the first time actually continued to fall. It was the lowest level which we've seen in 10 months. So 186,000 US citizens applied last week for unemployment support relative to expectations of over 200,000. So there's a very strong labour market at this point in time, and that's the challenge for the central bankers to contend with in their battle against inflation. The reaction for markets was a demand for a higher yield from US government bonds. We saw US government bond yields move higher, reflecting the expectation that central bankers may be able to afford to hold interest rates for slightly longer to tackle the inflation challenge, to bring inflation down from the current levels of 6.5% down to the target levels of 2%. The dollar, as a result, also strengthened on the back of the positive data and the reaction from bond markets, and the stock market digested the information very well with a positive return delivered from the US market on the day. Thank you very much for watching. We look forward to bringing you up to date on the key developments next week here on Morning Markets.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.